Hey everyone, welcome back to the channel. Today we're taking a deep dive into one of the most interesting new income ETFs to hit the market. The Rex Shares IncomeMax Option Strategy ETF, ticker symbol ULTI. This ETF launched on October 31st, 2025, and it's already drawing a lot of attention because of its potential weekly income powered by a specialized options engine. Before we jump in, we have to give huge thank you to all of our Patreon supporters, YouTube subscribers, and YouTube channel members. We thank you for your support. Disclaimer: this content is for educational purposes only and not financial advice. Consult a professional before making financial decisions. What is ULTI? ULTI is an actively managed ETF listed on NASDAQ and issued by Rex Shares. It was built from the ground up as an income strategy ETF, not a leveraged ETN, and that's a very important distinction. Older products once used the ULTI ticker symbol, but this one is brand new and completely different. ULTI generates income from three sources: dividends from the underlying equities option premiums earned from selling options contracts, interest income from short-term treasuries together. These three streams form what Rex Shares calls its specialized income engine. And that's what makes this ETF unique. It blends equity exposure, an active options strategy, and cash equivalent income all in one package. Key fund characteristics that sets ULTY apart. It is actively managed, which means a team of professionals is constantly adjusting the portfolio, the option strikes, and the risk overlay. It trades on NASDAQ, which gives investors easy access and liquidity. And again, ULTI is not a structured leveraged ETN. It is a real ETF with a fully transparent holdings basket and daily visibility. The strategy is classified as a defined outcome income ETF, focusing on options-driven income rather than traditional dividends or simple covered calls. ULTI has three distinct income sources and each plays a different role. 1. Dividends. These come from the underlying equity holdings. Some companies pay regular dividends which help provide a baseline of potential income too. Option premiums. This is the heart of ULTI. The fund sells both call and put options on its stock positions to collect premium income. During volatile markets, premiums tend to increase, and that directly benefits this strategy. 3. Interest income. UTLI holds short-term U.S. Treasuries. These provide stability and a reliable stream of interest income. All three together create a diversified income engine that doesn't rely on any single market condition. ULTI's design is built around a simple but powerful idea. Attempt to turn market volatility into weekly income through options premiums. To do that, the ETF invests in a concentrated basket of high-volatility U.S. stocks, the kinds of names that naturally generate rich option premiums. Then it overlays an adaptive option strategy that is constantly adjusting calls and puts. ULTI's objective is to seek weekly income for investors, though actual results will vary. ULTI's portfolio is a mix of high-volatility equities, names like Lemonade, Unicorn Bullish, Oscar, Health Solar Edge Galaxy, Digital Riot platforms. Each stock is intentionally weighted between 4% and 5%, creating even exposure across the portfolio. ULTI also holds short-term treasuries for stability and a large number of option positions, both calls and puts, which is where the premium income is produced. This is not a traditional buy-and-hold equity fund. It is a fully engineered options-driven income product with built-in downside mitigation. Since its launch, ULTY has paid 35 cents on November 14th, 27 cents on November 21st. Early distributions have occurred weekly so far, but there is not yet enough history to determine any long-term pattern. Portfolio construction strategy. ULTI employs a concentrated and diversified approach, balancing volatile stocks with stable assets like short-term treasuries to manage risk and generate income. As of November 20th, ULTI maintains its 4-5% weighting structure across its core equities. This approach spreads out the volatility exposure to prevent any single stock from dominating the risk. The ETF holds high volatility stocks, options on those stocks, and short-term treasuries. This gives ULTI a balance between income potential and risk control. ULTI is intentionally built around volatility. Why? Because higher volatility means higher option premiums. When markets move quickly, ULTI can collect more income through its option strategy. This is how ULTI attempts to convert market chaos into potential weekly income. Here's where ULTI becomes more advanced. The fund uses an adaptive options overlay that includes covered calls, put writing dynamic strike adjustments, risk mitigating hedges. This actively managed options system gives ULTI potential advantages: ability to adjust when volatility jumps, ability to defend during extreme moves, ability to harvest weekly premiums across market conditions. It isn't a simple call writing strategy. It's a flexible options engine. Every investment has risks, and ULTY is no exception. Key risks include active management risk. Results depend on the portfolio manager's decisions. Options risk. Options involve unique price behavior tied to volatility. Volatility risk. The same volatility that creates income can move prices sharply. New fund risk. ULTI is brand new with no long-term track record. Distribution risk, as distributions are not guaranteed and may include return of capital. ROC is not automatically bad, but it can reduce NAV over time. And concentration risk. ULTI invests in a narrow group of high volatility stocks, which means greater sensitivity to company-specific news, higher market risk, more frequent price movement, structural risk. New fund plus complex options equals unpredictable long-term performance. So what's the bottom line? ULTI is a specialized income strategy. ETF designed to generate weekly income from dividends, option premiums, and interest from treasuries. Its approach is unique, targeting volatile assets and actively managing options to capture income while mitigating extreme downside moves. For investors seeking frequent income with a modern options-driven strategy, ULTI could be an interesting ETF to watch as it develops more history. What are your thoughts about ULTI? Share your comments, like, and subscribe for more insights from Doug, the retirement guy. Thanks for watching.